In 2012, Nashville was still the kind of city where a middle-class family could realistically buy a house, a city known for country music, Southern culture, and relatively affordable living. Then, something happened. Over the next decade, home prices exploded. In many parts of the city, houses didn't just go up in value, they doubled. Some tripled. Entire neighborhoods transformed. Today, many people who grew up in Nashville say they can no longer afford to buy a home there. So, what happened? How did one of America's most affordable cities become one of its most expensive? The answer starts with the fact that Nashville was never supposed to stay a secret forever. For decades, Nashville occupied a unique position. It had many of the things people wanted from major cities: a strong job market, world-famous music, universities, professional sports, a growing healthcare industry. And unlike cities on the coast, housing was still affordable. You could buy a house close to the city without needing a millionaire's salary. That made Nashville attractive, but not famous. For years, it sat in the shadow of larger cities. Most Americans knew about Nashville. Few were actually moving there. Then during the 2000s, that began to change.
Signs of Nashville's explosive growth are visible from the city skyline.
There are cranes everywhere. It's booming.
Nashville is known for its country music scene and boasts the largest concentration of music industry jobs per capita in the US. But the secret to the city's success goes beyond music.
150,000 new jobs, $30 billion growth in our GDP, and we're tracking on that.
More than 2 million people and 60,000 businesses call the Nashville area home.
Articles started appearing everywhere. Travel magazines praised it, business publications called it one of America's fastest-growing cities. People started describing it as the perfect mix of opportunity and affordability. And that's when Nashville stopped being a local secret and became a national destination. But tourists weren't the people who changed Nashville. The people arriving with money did. Once Nashville gained national attention, the floodgates opened. Young professionals arrived looking for opportunity. Retirees arrived looking for lower costs. Entrepreneurs arrived looking for growth. Then remote workers entered the picture. Someone earning a big city salary could suddenly live almost anywhere. And compared to cities like Los Angeles, Seattle, San Francisco, and New York, Nashville looked like a bargain. To a local resident, a $450,000 house felt expensive. To someone arriving from California, it felt cheap. That difference changed everything. Because the people moving into Nashville weren't competing with local incomes, they were bringing outside money. Every new arrival increased demand. Every bidding war pushed prices higher. Every successful sale established a new benchmark for the neighborhood. The market started feeding itself. Prices rose because people expected prices to rise. And then another group arrived that had even deeper pockets: corporate America. As Nashville's reputation grew, major companies started paying attention, and once large corporations move into a city, housing markets tend to follow. New headquarters, new campuses, new investment, thousands of new jobs. Suddenly, Nashville wasn't just attracting musicians and entrepreneurs. It was attracting engineers, executives, consultants, and technology workers. Companies saw exactly what residents had always known. Nashville offered a great location, a growing workforce, and a business-friendly environment. Every corporate announcement created another wave of demand. More workers needed homes. More developers started building. More investors started buying. The city's skyline filled with cranes. Luxury apartments appeared everywhere. New towers rose across downtown. From the outside, Nashville looked unstoppable, and in many ways it was. But underneath all that growth was a problem. The city wasn't building housing fast enough. And that's when prices really started to take off. Demand was exploding. Supply wasn't. And when that happens, prices usually go in one direction: up. More people wanted homes than there were homes available. Builders tried to keep up. Developers tried to keep up. The city tried to keep up. But demand kept moving faster. Then investors entered the market. Not because they wanted to live in Nashville, because they wanted to profit from Nashville. Houses became investments. Neighborhoods became opportunities. Properties that once belonged to families started becoming assets.
The city boasts the fifth hottest real estate market in the country and a thriving job market. Dozens of publicly traded companies have offices here, and more are moving in. Amazon and Oracle are investing hundreds of millions of dollars, creating thousands of new jobs.
At the same time, short-term rentals exploded. Investors realized tourists would pay premium prices to stay near downtown. Homes that once housed residents started housing visitors. That meant even fewer properties were available for locals. The result was predictable. Prices surged year after year, neighborhood after neighborhood. The kind of appreciation that usually takes decades happened in just a few years. The Nashville that many residents remembered was disappearing. But rising home prices weren't the biggest problem. The real problem was what happened to the people already living there. Every city has people who make it work: teachers, nurses, police officers, musicians, restaurant workers, tradespeople, young families. For years, these people could afford Nashville. Then, the numbers stopped making sense. Home prices rose far faster than wages. Saving for a deposit became harder. Mortgage repayments became larger. Rent increased. Property taxes increased. Everything became more expensive. The people who built Nashville were suddenly competing against buyers earning incomes from somewhere else. People arriving from more expensive states could often pay more. Investors could often pay more. Corporations could often pay more. Locals couldn't. Many residents found themselves pushed further away from the city. The commute got longer. The housing got smaller. The dream became harder. And nowhere was this more visible than in the neighborhoods that changed the fastest. Walk through parts of Nashville today and you'll see the transformation immediately. Areas that once attracted working-class families now attract affluent buyers. Older homes have been replaced by luxury developments. Small houses sit beside million-dollar properties. Entire streets look different from how they did 15 years ago. For longtime residents, it can feel like living in a different city. The coffee shops change, the restaurants change, the prices changed, and eventually the people change too. That's why the Nashville housing story isn't really about real estate. It's about identity. The city became a victim of its own success. Everything that made Nashville attractive also made it expensive. People wanted the culture, the energy, the opportunities, the lifestyle, and the more people wanted those things, the more valuable Nashville became. Until one day, many of the people who created that culture could no longer afford to stay. Nashville didn't become unaffordable because of one event. It was a chain reaction. America discovered the city. People moved in. Corporations followed. Housing couldn't keep up. Investors piled in. Prices exploded. And somewhere along the way, the affordable Nashville that millions of people loved started disappearing. Because once a city becomes one of the hottest places in America, there's one thing that usually follows: the price tag.